Today, I'll be doing a fundamental analysis on Capital Mall and then making a decision whether I would want to invest or not in the Capital Mall stocks. The areas that I will be covering in this video would be the company profile, quantitative analysis, qualitative analysis, technical analysis, and then coming up to the conclusion. Capital Mall Trust was established in 2001 as property fund in Singapore, and then in July 2002 it was being listed in SGX. It has the largest real estate investment trust based on market capitalization and asset size in Singapore. It owns and invests in income-producing assets that are produced and predominantly used for retail purposes in Singapore. The portfolio contains 16 quality shopping malls which are located in suburban and areas downtown core of Singapore. It owns 122.7 million units in Capital Retail China Trust, which is the first China shopping mall real estate investment trust that is being listed in SGX in December 2006, and it has a credit rating of A2, which reflects that it has a low risk of default. For qualitative analysis, I would be analyzing on the financial ratios of the company to understand the performance of the company so that I would be able to make the decision whether I would want to invest or not in the company. Plus, I would be comparing it with its competitors. The cash flow balance of Capital Mall Trust has been in a rise, except for between 2012 to 2013 where there have been a slight decrease. But in the overall years, it has been in a rise. This indicates that there is an increase in buying power for Capital Mall Trust, and there is also a lower risk against loan defaults for Capital Mall Trust if there was loans to be paid up over a long term. It will have assets to cover up those loans so that it doesn't go default and bankrupt. Similarly, the net profit margin has also been in a rise. The latest net profit margin of Capital Mall Trust is 78.34 and its competitors Frasers Centrepoint Trust is 51.22 and Star Hill Global REITs is at 54.3. This shows that Capital Mall Trust has overperformed its net profit margin. Increasing the net profit margin, it refers to that Capital Mall Trust has been taking more net profit out of every dollar sales that he has been making, which is beneficial to the company. The earnings per share refers to an average earning that an investor would be earning based on the income of the company. And the PE ratio refers to how much an investor would be willing to pay for a share in a company compared to its competitors. The earnings per share for Capital Mall Trust has been in between the earnings per share for both Star Hill Global and Frasers Centrepoint. While otherwise, in PE ratio, it has been leading both its competitors, which makes it overperformed as investors would be willing to pay more for Capital Mall Trust compared to its competitors such as Star Hill Global and Frasers Centrepoint. Next, the quick ratio and debt ratio. The quick ratio for Capital Mall Trust in 2013 was $1.172, which refers to that Capital Mall Trust has $1.17 to cover every dollar of asset. This shows that they are liquid and they will be able to cover all their current liabilities. And for the debt ratio of Capital Mall in 2013 is 0.40. The debt ratio refers to the risk that the company will be facing in the later coming years. But based on the ratio, it shows that Capital Mall is quite safe from risk as it has more assets than liabilities and it will be able to cover all the liabilities if the liabilities go default. Lastly, is the return on equity and assets. The return on equity refers to the profits made by the investments that the company has invested on, and the return on assets refers to the utilization of assets that the company have utilized. For the ROE for 2013 would be 9.81 and the ROA for 2013 would be 5.77. This shows that Capital Mall has been receiving good income from its investment and it has also been increasingly utilizing its assets over the years. In conclusion, I would be able to say that based on quantitative analysis, the financials of Capital Mall Trust sounds rather safe and sound. But however, there are other analyses such as technical analysis and qualitative analysis that I will have to consider before making the decision whether to invest or not to invest into the company. Now I'll be talking about the qualitative analysis of Capital Mall Trust. The strength of Capital Mall Trust that is a fully integrated business model that is unique in Asia, and it has an experienced management team to maintain the successful expectation of the Capital Mall retail pipeline in developing countries. It has a strategic partnership with CapitaLand which assures that it will be able to get future integrated projects for its future growth. And its strong balance sheet assures that it will be able to get opportunities for additional borrowing for its future growth. The weaknesses are that it is concentrated in one asset class, and if there was any changes to be made in government regulations or policies, it would affect Capital Mall Trust greatly, and is very capital intensive. For the opportunities, the growth is in consumption, as there are more people who would actually look forward to retail malls in their own countries, and Capital Mall Trust can look into expanding into developing countries such as India or China. There's a greater demand for capital malls, and the progression of organization capital malls has been increased as developers with diversified funding would be able to get into a good position to capitalize on opportunities on going forward. And the threats are the raising and competition. Although there are one more acquisition opportunities, Capital Mall Trust continue to face competition from its existing competitors such as Star Hill Global REITs and Franchester Centrepoint, and there are also possibility for new entrants. Another form of threat comes in strict government regulation and has to handle changes to any regulations made on government policies. Next, moving on to technical analysis. First, I'll be covering the moving average convergence divergence. The moving average convergence divergence refers to the trend following momentum indicator that shows a relationship between two moving averages, and the moving averages is being calculated based on 26-day and 12-day EMA. The moving average actually shows on how an investor could enter or exit the market, and also it shows whether the market is bullish or bearish. Based on the MACD of the Capital Mall Trust, it shows that it's time for the investor to buy in and enter the market, and if profits will be seen if kept long. Next would be the relative strength index, commonly known as the RSI. The RSI refers to the technical momentum indicator that compares the magnitude of recent gains to the recent losses and attempt to determine overbought and oversell conditions of the assets. The RSI shows a range of 0 to 100, and the asset is deemed to be overbought if the RSI reaches above 70. But based on the RSI of Capital Mall Trust, it's currently at 40, which shows that there are chances that people will be buying in more until it reaches overbought quota, and then the prices will reduce. So till it reaches 70, there is chances for the investor to earn money, so they could actually enter the market to get their profits right now. And lastly, going on to the Bollinger Band. The Bollinger Band is referred to as a band that is plotted with two standard deviation away from the simple moving average, and the Bollinger Band is being used to adjust themselves and also get the market condition whether it's bullish or bearish. If the simple moving average reaches the lower Bollinger Band, there's a higher chance that people will start buying more and the prices will start to increase. And likewise, if it reaches the upper Bollinger Band, the amount of people selling their shares will be higher and the prices are tend to decrease further. Therefore, being that based on the current Bollinger Band of Capital Mall Trust, it shows that investors could actually invest into Capital Mall Trust by buying their stocks, as there is a higher chance that the prices will increase than decrease, and is very close to the lower Bollinger Band. Therefore, in conclusion, I have decided to invest into Capital Mall Trust. Based on my analysis, the performance of Capital Mall Trust has been better than its competitors, and based on the quantitative analysis, the financials are seen to be rather stable and strong. Based on technical analysis and the charts, it shows that the investors would be able to gain if they invest into the company in this market now, as all the charts shows that the prices of the shares are tend to increase rather than decrease. With this, I end the video of the fundamental analysis on Capital Mall Trust.